Types of savings accounts. Distinguishing between different savings accounts means looking at their features, where you can open them, and what they're designed to do. As you compare different savings accounts, it can help to ask these kinds of questions. Is this account designed for any specific purpose or goal? How much interest does this account earn? Are there minimum deposit requirements or minimum balance requirements to meet? Does the bank charge any fees for this type of savings account? Are there any tax benefits or advantages associated with this savings account? How accessible is the money in the account? Will I pay any penalties for withdrawing money from the account? Doing this kind of research can help you decide which types of savings accounts to have. From there, you can choose where to open them and how to fund them. 1. Traditional or regular savings account. Good for people who need to save money for the short or long term and aren't as concerned about getting the best interest rate, expressed as the annual percentage yield, APY. Traditional savings accounts are what you may immediately think of when you consider where to save. These are the savings accounts you typically find at traditional banks or credit unions. These types of savings accounts generally allow you to earn interest on your money, although they usually pay lower rates than other savings products. Many banks and credit unions allow you to open a regular savings account with a low minimum deposit. Traditional savings accounts typically allow you to make up to 6 monthly withdrawals, not including ATM withdrawals or in-person withdrawals at a branch, before incurring a penalty. The relaxation of Regulation D restrictions in 2020 removed the 6 withdrawal limit, although your bank or credit union still has the right to charge you a fee for exceeding the monthly limit. Banks and credit unions may allow you to manage your account online, via mobile banking, by phone or at a branch. If your bank is insured by the Federal Deposit Insurance Corporation, FDIC, then your deposits are insured for up to $250,000 per depositor, per account ownership category, in the event of a bank failure. The National Credit Union Administration, NCUA, provides similar insurance for federally chartered and most state-chartered credit unions. Pros: it's usually easy to open a regular savings account at a branch, and some banks allow you to do so online. You can earn interest on your savings to grow your money. You can visit a branch if you need help or want to deposit cash. Cons: the interest rates are usually low compared to other savings options. Monthly maintenance fees may cancel out interest earnings. Additional fees may apply for excess withdrawals. 2. High-yield savings account. Good for people who want to earn a more competitive rate on savings while minimizing fees. High-yield savings accounts, typically found at online banks, neobanks and online credit unions, are savings accounts that offer a higher APY compared to regular savings accounts. This is one of the best types of savings accounts to maximize your money's growth. Online banks often offer different types of high-yield savings accounts to attract savers who want to earn a better interest rate than what is found at brick-and-mortar banks and credit unions. This type of savings account may be appealing if you're comfortable managing your account via website or mobile banking versus visiting a branch. High-yield savings accounts are FDIC or NCUA insured, just like traditional savings accounts. In addition to offering better rates, online banks tend to charge fewer or lower fees, including monthly maintenance or excess withdrawal fees. Pros: you could earn a much higher interest rate compared to traditional savings accounts. Online banks typically have lower minimum deposit requirements to open an account. You're less likely to be charged a monthly fee at an online bank. Cons: no branch banking access means you can't deposit cash directly into your account at a branch. Transferring money between an online savings account and accounts at another bank can take up to a few days to process. You may or may not have access to your money via ATM, depending on the bank. 3. Money market accounts. Good for people who want to earn interest on savings while having more options for accessing their money. Money market accounts, MMAs, combine features of a regular savings account with features of a checking account. You can find these accounts at brick-and-mortar banks, online banks and credit unions. These accounts, which may also be called money market savings accounts or MMSAs, allow you to earn interest on your savings. Rates are typically better than regular savings accounts, and some offer rates similar to high-yield savings accounts. You may also be able to write checks from your account or access funds with an ATM or debit card. Similar to regular or high-yield savings accounts, banks can impose a fee if you make more than 6 withdrawals per month, even though the relaxation of the federal Regulation D restrictions now allows for readier access to your funds. Going over the monthly limit could trigger a fee or result in the institution closing your account if it happens frequently. Pros: money market accounts can offer better rates than other types of bank savings accounts. You may be able to write checks from your account or access your money using a debit or ATM card. You can open money market accounts at traditional banks or online banks. Cons: a higher minimum deposit may be required to open a money market account. Interest rates may be tiered, meaning you'll need a higher balance to earn the best rates. Banks may charge a monthly fee for money market accounts. 4. CD account good for people who want to earn competitive rates and won't need to access their savings right away. Certificates of deposit, CDs, are time deposits, meaning you agree to leave your money in the account for a set period. During that time, your money earns interest, and when the CD matures, you typically can withdraw your savings or roll it into a new CD. That sets these accounts apart from other types of savings accounts since there's a time factor at work. You can find CDs at traditional banks and online banks. Between the two, online banks tend to offer better interest rates. CD terms typically range from as short as 30 days or as long as 60 months, with longer terms usually boasting higher rates, although not always, especially in a lower interest rate environment. CDs are best for the money you know you won't immediately need, since banks can charge an early withdrawal penalty if you withdraw your savings before the maturity date. Creating a CD ladder of multiple CDs with varying maturity dates can offer a workaround for this issue. Pro: CDs can offer above average interest rates for savers pursuing short or longer term goals. There are typically no monthly maintenance fees involved with CD accounts. CDs at online banks may offer lower initial deposit requirements. Cons: withdrawing money from a CD before its maturity date may trigger an early withdrawal penalty. CDs at traditional banks tend to offer lower interest rates than online banks. Putting your savings into a longer-term CD makes it harder to capitalize on future interest rate increases. IRA savings account good for people who want to save for retirement and earn interest on their savings. An individual retirement account, IRA, is a tax-advantaged account designed to help you save for retirement. There are two main types of IRA accounts: traditional IRA and Roth IRA. With the traditional IRA, contributions may be tax-deductible, and the account grows tax-free until you withdraw the money in retirement. At that point, you'll pay taxes on the amount you withdraw. With the Roth IRA, contributions are not tax-deductible, but the account grows tax-free and withdrawals in retirement are also tax-free. Both types of IRA accounts can be opened as savings accounts, and the funds in the account earn interest. The maximum contribution limit for IRAs is $6,000 per year in 2021 and 2022, or $7,000 per year if you're age 50 or older. There are also income limits for making contributions to a Roth IRA. Pros: IRA savings accounts offer tax advantages for retirement savings. You can earn interest on your savings, and your savings grow tax-free. Cons: there are contribution limits and income limits for making contributions. You'll pay taxes on your withdrawals from a traditional IRA. Custodial savings account good for parents or guardians who want to save money for a child. A custodial savings account is a type of savings account that a parent or guardian can open on behalf of a child. The account is in the child's name, but the adult acts as the custodian and manages the account until the child reaches the age of majority, 18 or 21, depending on the state. Custodial savings accounts can be opened at banks or credit unions, and they typically earn interest. They're a good way to save money for a child's future education or other expenses. Pros: custodial savings accounts allow parents or guardians to save money for a child's future. The account is in the child's name, so it can be a good way to teach children about savings. Cons: the child will have control of the account when they reach the age of majority. The account may impact the child's eligibility for financial aid for college. Health savings account: good for people who have a high deductible health plan and want to save for medical expenses. A health savings account, HSA, is a tax-advantaged savings account that you can use to pay for medical expenses. To be eligible to open an HSA, you must have a high deductible health plan, HDHP. Contributions to an HSA are tax-deductible, and the account grows tax-free. Withdrawals are also tax-free if they're used for qualified medical expenses. Unlike a flexible spending account, FSA, the funds in an HSA roll over from year to year and the account is portable if you change employers. HSAs can be opened at banks, credit unions, or through a brokerage account. The contribution limit for an HSA in 2021 is $3,600 for individuals and $7,200 for families. Pros: HSAs offer tax advantages for saving for medical expenses. Funds in the account roll over from year to year and are portable if you change employers. Cons: you must have a high deductible health plan to be eligible to contribute to an HSA. There are contribution limits for HSAs. Withdrawals for non-medical expenses before age 65 will result in a penalty. Choosing the right savings account can help you achieve your financial goals, whether it's saving for a rainy day, a down payment,